Okay, I'm going to read a little article here. The article says a meaningful market correction is close, says a widely followed strategist. Widely followed strategist Michael Harnett can imagine pushing the sell button sometime very soon. He says, I personally think there is still some more upside, but I think there will be a moment, and quite a significant moment, probably in October or November, but I could see it in September when the markets are going to correct, and correct quite meaningfully, says Harnett, Bank of America, Merrill Lynch's chief investment strategist. Harnett said his call for an Icarus-like run-up in stocks this year, and then a letdown appears to be ready to play out, based on the action of his firm's bull and bear sentiment indicator. Okay, so he says the indicator has crept up to 7.6, close to the euphoric level of 8 out of 10. That triggers a sell signal for risk assets. Well, I'll tell you, I think he's right, but I think that it's going to be a little bit more significant than what he's talking about, and I'm expecting the exact same thing. This huge run-up in the stock market, I mean, this is just absolutely ridiculous. And the stock market's oversold. And when she comes down, I think it's going to be I'm not really going to call it exactly a crash, but it's going to be more than a correction. And it's going to cause a shock event that's going to turn the central bank around from their policies. A shift. It's going to be like a 2008 event. It's going to be one of those events where it shocks the system. And it's going to shock them into submission. Right now, they're in this tightening thing, and they're going to continue in it until something stops them. They're going to keep pushing and pushing and pushing. And I did an article on it earlier. I called it like a game of Jenga, where they keep pulling the blocks out until the tower falls. Well, this is what they're going to keep doing. They're going to keep raising interest rates. They're going to keep trying to sell their balance sheet. They're going to keep... see, the only reason right now why they're not raising interest rates even more is they want to sell that balance sheet. And that acts like they know that they can't get away with both. It's kind of like a guy, you know, he's not going to get away with two things at the same time. And he knows it, so he'll take one or the other. And this is the way with them. They know they can't get away with raising interest rates and selling their balance sheet both at the same time. So they really want to sell their balance sheet. They're going to start selling their balance sheet, and then later they plan on raising interest rates again. But either way, they're going to take this to the wall until it breaks. They're going to break it. And when they break it, that's when they're going to have to go back to quantitative easing again. They got no choice. Not only regular quantitative easing, but they're going to have to use other monetary policies, because the whole thing's going to break at that point. I did an article this morning on Bitcoin. Bitcoin has got to stop. That's the article I did, and I'm going to tell you, it threatens to break the system as well. So there's an awful lot of threats coming at the system from multiple different angles. You know? You'd be surprised, really, how much of an effect Bitcoin might already be having. You know, you say, well, so much money changes hands every day in the Forex markets and so on, you know. Yeah, but it's back and forth movement. It's not... the actual liquidity in the system, in fact, the liquidity's been drying up. And look, Bitcoin just sucked another $12 billion worth of liquidity in the last day or two out of the system. That's a lot of money. You know, because that's the pure liquidity. That's like a bank. A bank has different types of assets and stuff, and they have their working capital. And this is like working capital. This is of liquidity. This is the real good stuff that it's sucking off. It's like the icing on the cake, see? You know? That's what it's sucking off. So anyway, this guy, his name is Michael Harnett, and he is the... what did it say here? He is the Bank of America and Merrill Lynch's chief investment strategist. And he says a major correction is coming in the markets this fall, according to him. Not just a little bip, but a big poomp in the markets coming this fall. So don't be trapped by it when it hits, and don't be surprised, because you're getting lots of warning from guys who really know their stuff, you know. But I think that it's going to be even bigger than what he's talking about. I think it's going to cause a systemic shock to the system that's going to cause the turnaround in central bank policy. That's what I'm thinking. And when that turnaround comes, that's going to be your breakaway moment for gold and silver. When they change economic policy, then everybody in the world is going to see that this whole big game that they're playing, that they don't have control anymore, that they've lost control. The world's going to see it at that point. And when they see that central bank policy is not the cure-all, it's not solving the world's problems, it's not going to solve world peace, whatever, and that the central bank doesn't really know what they're doing, when it's exposed for what they really are, and everybody sees that they don't have the control that people think they have, and this whole thing that they've been playing is not playing out the way they think, then this whole house of cards is going to come down. And that's, well, they've already shown their hand. Think back, not long ago, to the brick exit. Do you remember that night, what was happening with gold and silver? That night when the brick exit shocked them unexpectedly, because they expected a vote for Britain to stay in the European Union. That's fully expected. All the bookies in Britain were saying, hey, we got this, we're going to stay in the European Union. And then all of a sudden that night, there was an unexpected vote to leave the European Union. Any of you guys, were you watching what happened to gold and silver that night? Did you see what actually happened that night? Well, I can tell you what happened. Silver was going straight up. It was like $20, and $20 was meaningless. It broke the $20 mark, and it was meaningless, and heading for 22, and so on. Heading up, straight up, like like 10 cents a minute. Straight up. They showed their hand. Now, this was a small shock event, but when the big shock event hits, what do you think they're going to do? They're going to do exactly the same thing. They're going to panic move into the real big safe haven asset of the whole system. They're going to panic move into it. They've already showed what they're going to do. You just got to wait for it. It's coming. You know, I know it's taken a long time, and I know a lot of you guys are getting weary. I mean, they just knocked her down just in the last day or two here. They just smashed her down again, and you're getting so used to being smashed down, you just think it's the normal. Well, I'm here to tell you it's not the normal when silver gets smashed down. That's not the normal. That's manipulation of the marketplace. You know, and they can only do it to a point. When they lose control of this, because of all the pressure that they've put on it, this thing's going to shoot up. Oh. And at that same time, they're going to be running into the cryptos, too. So it's not just gold and silver, it's going to be the cryptos. Anything that's not the dollar. You know? So, listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next article. Bye.